The Trump tariff showdown could have a huge impact on the housing market. Or maybe not. I just Googled U.S. housing market, and the top 3 stories were doom and gloom about China tariffs crashing the housing market. So, fact or fiction? Let's take a look, and I'll explain why these panic-inducing predictions might be bullshit. So here are the headlines I was talking about. China tariffs spell disaster for housing. Why China tariffs are bad news for the U.S. housing market, and trade war will tank home prices. But what they're not telling you is that housing markets are primarily driven by local factors, interest rates, and domestic demand. International trade is just one piece of a much larger puzzle. First, let's put things in perspective. Home building materials from China represent only about 2 to 3% of total construction costs. Even with higher tariffs, we're talking about potential increases of maybe 1 to 2% on new home prices, not the housing apocalypse some are predicting. What the headlines miss is that tariffs can actually stimulate domestic manufacturing. American building material producers may step up production, create jobs, and potentially stabilize prices over time. That's the goal: create more economic activity in manufacturing communities, which supports housing demand in those areas. Looking back at previous trade tensions, housing markets have shown remarkable resilience. During the 2018-2019 tariff implementation, oh, that's right, this isn't the first time Trump's implemented tariffs. He did it in 2018 and 2019, and we saw continued housing market stability in most regions. History suggests these impacts tend to be temporary and regional rather than catastrophic. So let's focus on what really drives housing markets: interest rates, job growth, demographic trends, and local supply and demand. These factors have far more influence on your home value than tariff policies. Remember, when experts predicted housing crashes in the past, that never materialized. So what does it mean for home buyers and investors? Some buyers may actually benefit from temporary market uncertainty. The current rate environment is not just unpredictable, it's emotional. Markets are searching for clarity while reacting to daily headlines with little regard for fundamentals. This climate is breeding fear, but also enormous opportunity. Courage is resistance to fear. If other buyers hesitate due to negative headlines, it could create buying opportunities with less competition. Smart investors see beyond these doom and gloom headlines to the fundamental strength of real estate as long-term investment. So look, I'm not saying tariffs have zero impact. Economic policies always create ripple effects, but the housing market apocalypse, some headlines suggest, that's selling fear, not facts. The housing market is far more resilient and complex than these simplistic predictions suggest. What do you think? Are these headlines causing unnecessary panic? Drop your thoughts in the comments below. If you found this perspective helpful, give it a like and share with someone you think might be worried about these housing market predictions. Want to know how to take advantage of the current housing market opportunities I talked about? Visit us at teamaronhomeloans.com and hit follow for more mortgage insights without the hype.